Hi traders, welcome back to my channel. Happy Saturday. Today we are looking at breakout candles. So I'm just going to give you kind of like my top tips when it comes to trading the breakout and what a breakout should look like. I know we hear it a lot, but no one really talks about the specifics of what you're looking for when we talk about a breakout. So hopefully this is a good reference video that I can like send you guys back to when I am talking about the breakout structure and things like that going forward. So let's get right into the video. Please subscribe if you haven't already. I have a big giveaway coming, so if you subscribe, you will be in the know for that as well. The first thing we're going to look at when we're looking at breakouts is the time frame. So what time frame are you on? That's going to make a really big difference, and I'll tell you why. Generally speaking, when it comes to a breakout, and a breakout candle essentially, so for those, because I know I do get beginners here, a breakout candle is essentially a candle that breaks some form of significant structure. So in my videos, we talk about zones a lot. Zones are also known as key level or support and resistance areas, key levels, I should say. You could also have a breakout, though, of any form of structure. So a trend line, some people consider EMA structure, chart patterns, things like that. So that's what a breakout candle is. Now let's go back to the time frame thing. So on the 4-hour time frame, which is what I'm on now, this break, right, is going to be a lot more significant, and it's going to give you a lot more accuracy than, say, the 5-minute chart. And the reason being, you give price enough time that you kind of know whether or not, you're getting a false breakout or where price really wants to go, because you have enough time that you can, price really shifts in that direction. When you use the 5 minute, maybe even 15-minute or anything less than that, you get into the risk of, the candle you see is really just slippage. And if you had a weighted on the 4-hour chart, it would actually look something like this, right? So it did appear to be breaking above, but it was just news related or, something insignificant, and price went right back down into that structure. The drawback of using the higher time frames, like the 4-hour, the daily, whatever, is that you're not going to get a great entry. So like in this case, if you had waited for the 4-hour to close, you've missed most of the entry. If you're riding zone to zone, this being zone 2, you don't really have a great entry there. So there's no kind of one size fits all to this. And my best recommendation to you is to use the highest time frame you can while still getting a good risk reward. And the reason I can't give you a set time frame is because we all trade differently. So for someone like myself who trades, long-term swing or positional trades, it's going to look a lot different for me. I don't mind waiting for the 4-hour candle to close because I'm not generally riding to this area. I'm probably riding up here or even higher than that, right? Because I'm looking at the higher time frame trend. If you're a day trader, the most you're probably going to be able to use is like the 15-minute candle. But just keep in mind that the lower the time frame you use, the less significant and the less accurate it's going to be. That being said, if you're using a tight stop loss, you might be okay because your risk reward, it still plays out and you're okay with losing a small amount of money. So just keep that in mind. That's something I know, like I wish I could tell you guys a set, kind of give you like set guidelines, but there really aren't any because we all trade differently on different time frames. But I did want to mention that. Next, we're going to talk about structure. So I already briefly spoke about structure and the different types of structure, but what I want to get into talking about is making sure that the structure you're looking at is valid. So oftentimes what I'll see people do, and I've definitely been guilty of this as well, we kind of place our zones and our lines where we want them to be. So we can get into this bad habit of, you want this to be an area, so you'll draw it in as one. And I'm definitely guilty of doing this from time to time as well. I don't think any of us are perfect here, but a really good tip to ensure. So let's say I just drew this level in. I said, yep, I have a lot of wick touches here. I, drew my resistance line. It seemed like a good zone. I boxed it in. Let's delete this one so we're not going to confuse. And I'm like, yep, that's a great zone. You need to go back through price history by extending this rectangle. You can extend it however you want to. I just add a bunch of zeros at the end of each number and make one of them into a positive number. Extend it all the way back as far as it can go. Go back through price history. And I want you to look at how many times this area has been respected. So this area I can see was respected at least one time. And you keep going back and it's really annoying. And sometimes you won't see a lot of touches. And basically what I'm getting at, I picked the worst area ever, is that if you don't find that price is, and I can see here, like we've had a little bit of, price did respect it there, but not very well because it ended up getting kind of pushed through. We do have another touch there. You want to see at least 3. I want to see at least 3 times price respected that area. So I am seeing this happen quite a few times. I wouldn't consider this personally a very strong level because there are many times I can see price didn't respect it. So I would use this more as, I wouldn't consider this a major zone or a key level by any stretch of the imagination. I would use it as a support or a resistance, but again, definitely not, sorry guys, we're getting all, okay, here we go. Definitely wouldn't consider it a major area and it's not as accurate. There are other levels, however, let's just zoom out by going to the higher time frame because I don't want to go back through again like that. There are other levels, however, that if you extend them out, let's use this because I'm pretty sure this one's a very significant area. So again, just adding a bunch of zeros here. Once we extend this guy out, you'll see that this area has been respected multiple times with little to no slippage. So here, here, here. And this might not have been the area that I was talking about. Here, yeah, it's looking pretty good. Okay. So, and this is the weekly time frame as well. Okay. So for us to see, even a few times where it was respected is really, really good because the higher time frames are obviously more accurate. And yeah, so the more touches you can get on a level, the more significant it is. And that's what we mean when we say price is respecting an area. We mean that it has attempted to break it, but couldn't and respected it as price or resistance. That's what we mean when we say that, because I do get that question as well. So you just want to make sure the structure you have has been respected well over time, and that you're not using just a standard support or resistance that price has easily broken many times before. That's going to help you a lot when it comes to breakouts. Looking at the wick versus the body, that's the next thing we're going to get into. So this kind of goes back to what we were talking about before, but I'm just going to zoom you into this level here. This candle here, okay, if you were entering on let's say the 5-minute time frame or the 3-minute time frame, this would have appeared to be a full candle like this. It would have appeared to be breaking out, okay? But because price ended up coming right back down and just completely rejected, up way above the actual zone, not way above, but above the actual zone, waiting for the 4-hour candle to close, we can see that this was actually a fake out. And you would have been stopped out likely, okay? Because now it did end up going on upward, but if you had a tight stop, you probably would have got stopped out prematurely. Waiting for the 4-hour candle to close here, you would have got a much better entry or a much more accurate entry. However, your risk reward probably wouldn't be as great because waiting for this 4-hour candle to close means that price has already, done a little bit of the move. So it really depends on your style and your risk tolerance. For me, I'm not okay risking more to get a better risk reward, but you might be, and that's totally fine. But just keep that in mind, that you want the body to be breaking above, okay? So you want, let me get rid of all this. We want to be seeing this actual body breaking above, okay? And you need something to close. Whether you use the 5-minute, the 15-minute, whatever candle you're using, you want the body to be closing, not the wick. This on any time frame is not considered a breakout, okay? So that's pretty easy. And then the next candle. So we're going to look at the next candle. So the follow-up candle, I like to call it, which is essentially just, and we're on the daily time frame, these are just examples, so it doesn't really matter, but let me just go down to like the 15-minute because we'll see a lot more price action, obviously. I forgot we were on the higher time frame, to be honest with you, but it doesn't really matter. Okay, so let's look at this guy here. So I'm going to zoom you guys in. Make this look nice. So we have a breakout here, right, of this zone. Not a very nice wick there. Personally, guys, when I see a rejection wick like this on a breakout, I don't enter. However, this did end up working out, obviously, if you wrote it long enough. What I would look at, though, is this candle. So this is the follow-up candle. And this is where I enter the trade. This candle is really important because if this candle isn't pushing in the direction I want to go, so in this case, a buy, right? So going upward. If it's not pushing to the upside, I'm not going to enter because a lot of rejection here tells me, especially after a wick like that, tells me that we don't have enough momentum and that this might be a fake out. So I need that candle to be forming a nice long body as soon as it begins. Okay. And I'll enter, as it's moving upward. If I have no momentum and I see it starting to go right down, I don't enter. So that's just my take on that. Again, time frame is going to depend on your trading style. So that's it. Hopefully this video was helpful to you, especially for my breakout traders. I know it's more of a simple video, but I did want to cover this because I get a lot of questions asked about it. And this is just my take on things, of course. So these are just my opinions. Hopefully you guys subscribe because I do, like I said, have a giveaway coming. I'm doing a funding talent account giveaway. So that's pretty awesome. So make sure you're subscribed for that. I think I'm going to announce it in tomorrow's video. So on Sunday. Yeah. But anyway, I'll see you guys in tomorrow's video.